Now, I think this is absolutely insane. The last time I filmed an options trading video, Tesla was down around $330. Right now, Tesla's well over $800, and the option chain, the option contracts are ridiculously expensive going out just a few weeks. So I thought, why not film another options trading video here? We're going to go into a detailed look at the Robinhood platform on my computer, go into options and some strategies and things that you want to make sure you know when it comes to trading options on Robinhood, especially if you're a beginner or if you're someone who's coming over from a different platform. There are a lot of little intricacies that you're going to want to know, want to have in place before you start using Robinhood to trade options. But I think the Tesla example only emphasizes the true power options have, especially if you're someone with a small account. So if you stick to the end, I'm hopefully going to give you guys a great base. If you're someone who's only trading with a couple bucks, a couple $100, you're someone who's just looking to get into things, maybe paper trading, you're not sure, you don't want to start risking your money. Hopefully this will give you guys an idea of how options work and how you can actually get started and make a lot more money in terms of a percentage base gain with a much smaller amount of money to start out. So to start off, let's go over options. When we go over options, we're talking about options. A call means you're really thinking the stock is going to go up. A put means the stock is going to go down. So if you're buying a call or you're buying a put, okay, that's what you're really thinking. Okay, call up, put down, that's what you're hoping. And if it does go that way, generally you're going to make money, but there are some things I want to go over in terms of options trading that can affect that, because that's not always the case. Now, of course, what you can also do is the other way, where you can sell puts and you can sell calls and collect a premium for that option contract. We'll dive into that as we kind of actually can see that inside of the Robinhood platform. Those are just kind of the basics. And so when it comes to options, it really doesn't have to be so confusing. There are things here and there, yes, I can understand why there would be confusion. And puts, generally, there are more confusion. There's more confusion on puts than calls, because calls kind of make more sense than puts. But we'll dive into that. And so really what you're doing, like buying or selling a stock, is you're betting on the stock going up or down. Generally, if the underlying stock, like for example, we'll talk about Tesla, if you buy a call option and Tesla goes up significantly, you're going to make money. If you buy a put option and Tesla goes down significantly, you're probably going to make money. So in all reality, in the simplistic overview, that's kind of what you need to absolutely know when it comes to trading options. And I'm going to dive further into this. So when you're buying a contract, when you're buying one contract, a call option is the option to buy 100 shares of that stock at that expiration price. So let's say Tesla is trading at $850 and you want to buy a Tesla call going out a couple weeks, or let's say that expires this week. It doesn't matter, but that call, let's say that call expires at $800. Well, right now, that option contract is going to be worth, at a minimum, whatever the difference between the price that Tesla is above that expiration price, above that contract price. So you take $850 and you subtract $800, so it's at a minimum going to be worth $50. But then you have to factor in things like time and volatility, and that will also help increase the price, which I'm going to hopefully show you guys more of in a second. And so when you're trading these option premiums, because the overall option, the actual contract premium is what you're trading, let's say that premium is going for $60. Well, if it's going for $60, well, it's actually going to cost 60 times 100 out of your pocket. Reason why is because you're actually buying the option to purchase 100 shares of Tesla, or on the put side, sell 100 shares of Tesla at that specified price. Now, why are these premiums going to go up and down? Well, think about it. If you have the ability to buy Tesla in a month, in 2 weeks, or whatever it is, whenever your actual expiration date, whenever your contract expires, if you have the ability to go buy Tesla at $800, when Tesla in 2, 3, 4 weeks might be worth $1,000, $1,200, do I even dare say $1,500? Who knows? With the insane volatility of a stock like that, that's why you're doing that. And so people pay a lot of money to have that option contract, to have the option to do so. And so when you're trading just options, you're not going to be worried about the actual option expiring and things like that. But what you do need to be worried about is the actual premium cost, and that's what we're talking about in this video. So real quick, why Robinhood? Well, Robinhood is a free trading platform. Of course, right now, there's not too many reasons, say Robinhood over TD Ameritrade, over Webull, over this. When it comes down to, I like Robinhood for the option chain, for the option contract trading, is simplicity. You don't have to be some crazy trader who has all these indicators and has all this stuff that they're going over, these patterns and everything. Of course, that is an aspect to trading that you're going to want want to have some familiarity with, but you don't need that. And Robinhood really kind of caters to that beginner or just simple trader who doesn't want to have to deal with all these crazy things. And that's the aspect of Robinhood that I like so much. And that's why I love the option trading platform. There are some benefits to other ones, but there are also benefits to Robinhood's. And so when it comes down to it, as long as you know how to trade options, I really don't think it matters too much which platform you're going to use. If you're just going to basically trade options, you're not dealing with significant amounts of money, and your time frame in terms of how quickly you're going to be getting in and out doesn't need to be to the second. So when Robinhood opened up free trading, options also came along eventually with Robinhood as well, and those were free. And so the actual pull there was awesome because you can trade options for free, whereas many other platforms, I know when I started trading options, I was actually on Fidelity, and it was like $4.95 per trade. And of course, not too significant when your actual option price is going to be going up and down significantly. So if you're making the right move, if the option goes the right way, generally you're going to make more than $10 in terms of your buying and selling fees when it comes to the commissions. So you shouldn't have a huge issue. But with free trading, it even caters to that beginner investor even more, because you can look at these even cheaper option contracts. They're going to cost you a few bucks up to maybe $100. And now you don't have to worry about those option contracts moving too much, or they don't have to move super far for you to be able to come in, buy it, and sell it for a profit and execute your trade according to your plan. So what I want to do now, guys, is stick with me here. We're going to go inside the option platform, the option chain here on Robinhood. We're going to go through some awesome examples, and then I have some awesome points to go over as well that are going to help you make money with option trading, or at least hopefully not lose money. At least I have some experiences myself of how much money I made. I've made like $1,500 in a day, and then I also have lost significant amounts of money in a day trading options. So there are some dangers there, and I even have a video going over the dangers of options trading, which I highly recommend at the end of this video you go and check out on the channel. So let's jump into my computer right now and dive into the option chain on Robinhood. All right, guys, so here we are inside of my Robinhood account, and right now the account's sitting at $521.50. If you guys want to be more update on what I'm actually trading, I'm going to be making more update videos going forward, but I really actively use my Webull account, which is now over $2,000. So those videos come out every single Saturday. The Robinhood account, what it's going to be used for a lot more going forward, is actually building out a dividend portfolio. So I'm actually going to be doing that with you guys. You guys can see that. But this video, we're talking options. So let's jump into Tesla right here. Like I was saying, I want to go over the Tesla option chain. I want to actually just jump into a lot of different things. And I don't really like looking at the red. Okay, so when things are down, I don't like looking at that. I want to look at the green. Let's get this. There we go. That doesn't look much better. I mean, so Tesla's now up 53% over the past month. When I made a video going over options trading not too long ago, Tesla, it was well down below where it is right now. It's well over 100% higher than what it was, and so that's absolutely insane. It might even be back something like this. Yeah, here it was probably right around here. So look at this. Ever since I made that video, it's kind of crazy how Tesla has absolutely launched since then. But what we want to do is you want to come into Robinhood, find your stock, and when you find the stock you want to trade options on, boom, you can trade options right here. Click on that button that says Trade Tesla Options, and here we are. And what it's going to do is it's going to give you guys some auto-populated things, and we're going to go through this and make sense of this. So a couple things right off the top that you want to be very aware of when it comes to these options contracts. So it's going to tell you right off the top, buy or sell, a call or a put, and there you go. Okay, so like we were saying here before, when it comes to buying a call, that's essentially a bet on the stock price going up. Now, don't worry about the red here because the reason why is because Tesla was down today. The overall market today took a pretty significant beating, and so that is why it's going to show red. If the contracts you're talking about, for example, if we're talking about puts, this should be green because the puts were up, and so that's why it's going to show you guys green. So that makes sense. Just don't be scared that if it looks red, that means you're selling. No, that's not the case. It just means that what's going on today with these contracts, have they been up, have they been down? Well, if Tesla's down, it kind of makes sense that it's going to show up red here. So make sure before you jump in, you know exactly what you're actually buying, the contract, and it will confirm with you here on the right hand side. So we'll talk about that in a second. So let's say we want to actually run these contracts out into mid-July, and so let's say we want to go out to some point in the summer, and we think we're looking long term. We think Tesla's going to go well over 1,000. We think it's going to be big, blah blah blah. And so that's the case, and that's what we're looking at. And of course, you guys can scroll through up and down. We have the strike price here on the left hand side. We have Robinhood's going to give you guys a break even price. It tells you percentages to break even, a percent change here on the day, and percent or just the actual change in value today. And so Tesla went down. So makes sense that the actual we're looking at a significant change in the actual options going down. But what I want to tell you guys here is this is a big key. So when you're talking about at the money, in the money, which I'm going to dive into here in a second, these contracts, take a look. Tesla is down right now today 6%, almost 7%, which is significant. That is significant. Although with a volatile stock, to a degree, is it really that significant? I don't know. But take a look at these contracts. These contracts that are around the money, and so I'm going to talk about what that means in a second, have gone down 23%. So Tesla went down 6 to 7, and these contracts just about times 3, okay? So maybe even almost times 4. And so what does that mean? Well, that's kind of showing you the power of options trading with the actual underlying stock, in this case being Tesla, the actual underlying stock only moving 7%, not even, right? But the option contracts that we're looking at right here moved 3 times more than that. So that's showing you guys how much more movement options can have, and that if you pick the right movement and if you get the correct move, you can make significantly more on a percentage basis than the actual underlying stock if you were just to buy one share or however many shares. Reason being here behind this is that this is actually going out sometime, so the actual change won't be as big. But let's zoom this guy in and let's talk about, let's say, a March 27th. At the time I'm filming this video, we're late February, about to be March, and so the time I'm filming this video, look at this. Now, the reason why here is because these contracts are actually expiring sooner, and so they're going to be more sensitive to movements in the stock today. Now, again, these call prices are down significantly today. Of course, Tesla is down pretty significantly as well, and so these are down pretty big. And so you start to see, okay, that, if you buy something a little bit closer, that's something that's not super far out, that's a little bit closer, about a month out as of right now, all you need is a 7% move in the stock, which, is significant, but it happened today. And look how much money you could make or even lose on the wrong side of things, 40%. So if you have $100 in this trade, you're going to be down, a significant amount of money just like that. But on the flip side, if you had puts, well, you're pretty happy today. So I don't want to scare you guys anymore. I hopefully that makes sense. And so now let's talk about in the money versus out of the money. Okay. So right now we have a share price of $8.40 right here for Tesla. Okay. And so of course, the time you're going to see this video, Tesla is volatile as anything. So it is going to be significantly different probably than this price. So this is the share price, and so in the money versus out of the money, this is a big distinguishing factor here that people kind of have issues with understanding, okay? And I want to make things very simple, okay? So in the money, on calls, it's different. Calls and puts are different for in the money, okay? So let's explain. In the money for a call, okay, means the call essentially has more value, and that's what we're talking about in terms of in the money. So what does that mean? Well, Tesla's priced at $8.40. So this stock price, this contract is the first contract in the money that we're seeing right here. Why is that? Well, because the stock price, the share price of Tesla is above this option, strike price, okay? And this is the strike price we see on the left-hand side, $8.40. So if you were to buy this contract right now, okay, it's going to cost you $73.35. Now, it's actually going to cost you that times 100, so I'll explain in a second. But if you were to buy this contract right now, you are buying the option to buy, or to option for 100 shares of Tesla, to buy 100 shares of Tesla at $8.40, okay? So at $840. Now, this does expire March 27th, okay? So it tells you right here again in the, once you click on that button, it also tells you, again, you can sort by those expiration dates. Now, the reasoning why this is going to be so expensive is because there's a lot Tesla's very volatile, and there's time for it to go well past $8.40. And so if Tesla goes well past $8.40, it pushes $900, it pushes $1,000. Well, this is going to be very, very lucrative, and it's going to be a very nice play because you can buy Tesla well cheaper than what it currently is trading at. So it's going to have a higher value. Now, what we have here is Tesla actually just dropped a tiny bit here, and we're actually after market hours trading, which I also wanted to talk about that here as we get towards some of my other key points to go over. So calls, okay? If the strike price is below the actual price of the stock, the share price right here, okay, that is an in-the-money contract, and those contracts will be more valuable than those out of the money, which you'll see above the share price of Tesla. When looking at puts, it's the actual reverse, okay? So puts, you're betting on Tesla to go down. So what's in the money here? Well, contracts that are in the money are contracts with a strike price above the current share price of Tesla, okay? So strike price here of $8.50 right now, as Tesla's actually dropping just a touch here after hours. Tesla, the strike price of $8.50 is going to be more valuable than a strike price of 810 with a put contract, okay? And why is that? Well, because you have the option to sell a certain amount of shares or 100 shares of Tesla, depending on how many contracts you buy, 100 per contract. So you have the option to sell those contracts, and it would make more sense, or it would be more profitable for you to sell contracts much higher, right? Buy low, type sell high. So think about that. If you can sell at a higher price than what the stock is actually valued at right now, that is something that is going to be valuable. Okay, so this sounds really cool and sounds like, okay, that makes sense, okay. But now what? So where are these prices coming from? What does this stuff mean? Okay, well, let's jump into it. Let's go back to the call side because I think calls are a little bit easier to understand initially, then we'll go over to puts to talk about the same example. So I have this long call here, and when you're going through to actually trade the options, you'll then click continue, and then what you're going to do is buy, let's say, one contract. So I type in one contract, and then what's going to happen here is it's going to actually there's going to be a bid, there's going to be an ask on the contract. Right now we're after market hours, so there's going to be a larger spread than if this was trading during market hours. And look at this. It's going to cost me this much money because what you have to take into account is this number that you're seeing right here. You're going to multiply that by 100, okay? Because the option is for 100 shares of Tesla, although it is one contract, that is the minimum, okay? And so you have to understand that. And that's why I don't really recommend trading these Tesla contracts when you're just starting out. Because think about it. It's a cool example because Tesla's been so volatile, and I'll go into a different example in a second, but think about it. Who's going to pay $7,000 for one contract of Tesla? Now, of course, this can go, if this moves, if Tesla moves $30 tomorrow, this contract of $7,300, right? If Tesla moves $30, think about it. It'll be worth $85, so it'll be worth, over $1,000 more if it moves, a significant amount tomorrow. And so that's the pull there. And so, of course, it could make sense for somebody trading with a significant amount of money. But if that's your entire trading account, not a good idea. Definitely not a good idea. I've made the mistake of doing something like that before, and I've lost a lot of money. And then I was like, okay, well now what? I pretty much just lost half my trading account in one shot because I made the wrong play or the wrong choice in terms of the direction of the stock, or news came out, which I'll dive into more in a second. So where's this price come from? Well, what we're going to talk about here is now the actual value of these options. So when looking at a contract that is going to be in the money is going to have some intrinsic value. And so, for example, this call contract right here, this $830 contract of the strike price, I'm going to say, when I call the contracts by like a certain name or a price, I'm talking about the strike price. So the $830 contract is what I'm talking about, and that's the strike price right here. And there's a lot of stuff in here that we can go into. There's more complicated things like the Greeks. I can make a video going further into that, but for the purpose of this video, I don't want to make it too long for you guys. And so how this number is being, how this number kind of comes about here, okay? Well, right now, Tesla is $838. So $8 above the $830, like I was kind of talking about in the beginning, there's going to be a value automatically of $8 right there because Tesla's trading $8 higher. Now, when you have to take into account this price, why is it so high? Well, because there's a lot of time. There's about a month of time for Tesla to get there, and there's the volatility factor. So taking those things into account, the option contract has come out to be $75.70. Now, 8 of those dollars, because Tesla's trading at $838, 8 of those dollars are intrinsic value, and the rest is being priced in by things like time value, the volatility, and things like that. Okay, so that's where these numbers are coming from. Now, this is kind of showing you, okay, does it make sense for me to trade Tesla? Well, it's super, super volatile, so maybe not. If I have the significant amount of money and I'm looking to trade this on a shorter time scale, maybe it's a good trade, but at the same time, Tesla is going to have to make a big move, and that's why this break-even price comes in handy. So let's say I buy these 830 contracts. Yes, as of right now, if we got to March 27th, that's the expiration date, we get to March 27th, this contract would be worth $8 right now. If Tesla was $838, it would be worth $8. So what is this telling me? It's telling me that Tesla needs to get over $970 or $905.70 for me to make money on this contract. Now, it needs to get there by the expiration date. If Tesla gets to this price before the expiration date, I will make a lot more money. The reason why is because there's still time, there's still the volatility, so that will also increase or keep the price of that contract high, as well as the intrinsic value as Tesla moves up. For example, if Tesla were to go to 900, okay, automatically this is going to have a $70 intrinsic value. But now let's say this happens, let's say Tesla goes to 900 tomorrow, there's still going to be 3.5 weeks, right, before this contract expires. And so you're still going to have a very high time value and very high volatility. So this contract could be well over $100, and I will make a lot of money in one day. Now, that's of course theoretically speaking, but that's what can happen there with this contract. So hopefully you guys understand that. It's the same kind of idea here on the put side, not the sell, on the put side. If I'm buying a put, it's the same idea, just in reverse, okay? So let's say this contract, let's say I have the 850 strike price contracts, Tesla goes down to 800 tomorrow. Intrinsically, that's going to be worth $50 right there. But on top of that, you're going to have the time value, you're going to have the volatility factor and things like that. So going back to the call side, we can talk about this again. Let me go in on a much shorter time scale and show you guys kind of what we're talking about in terms of how much these could be, significantly cheaper tomorrow. So again, now these are a lot cheaper. So if I want to buy the 830s right now, of course, markets are closed. I can only trade these contracts. I can only trade options from 9:30 a.m. Eastern time to 4 p.m. Eastern time. That's the only time you can trade them. You can't trade pre-market or after hours when it comes to options, although the actual stocks, you can do that. So let's say right now this is going to have an $8 intrinsic value. This is pricing in by February 28th, so a couple days out from now. By the end of the week, usually these expire on Friday. Of course, you can find some other different stocks that'll have expiration dates of every couple days. I think SPY, SPY, the S&P 500 index, I think that can have expiration dates every couple days. And so right now, this is going to be worth $8 to me. But of course, what you have to do is if Tesla by the end of the week, as long as Tesla gets to 857.83, you will break even on your trade. Or if it goes past that, or if it hits this number sooner, this will go up. That's all you really need to know. And the same idea on the put side. So let's say we're talking puts, and this is by the end of the week. As long as I have let's say I have the 850s, and let's say as long as Tesla gets to 814 by the end of the week, I will at least break even if it goes below that, or if it gets to this number faster, or if it even gets close to this number, but it happens very, very quick. This will be more valuable, and I'll be able to sell this contract for a profit. One more thing I want to show you guys now is an Apple example. Apple is trading just under $300. So we come to Apple, and we can go to trade Apple options just like that. But of course, the option to add this to our watch list is there if we would like to do so as well. And now we're looking at Apple, and we can see significantly lower prices because Apple's not going to be as volatile as Tesla has been as of late. So if we were looking to buy a call contract right now, let's say at 300, which is just out of the money right now for this Apple contract, we can see that all we have to have is it's going to cost me $5 for this to expire by the end of the week. And it's going to now, as long as Apple gets to 305.03 by the end of the week, I'll make money on this contract when I sell a contract before the expiration date of February 28th by 4 p.m. Market time. And what Robinhood will also do is it will not allow these to actually execute, because technically what you're doing here is you're buying the option to buy 100 shares of Apple at $300. And so if you don't have that ability to do so with your account value, what Robinhood will do, I think it's like an hour or 2 hours before the market close, and it will give you a notification that your options expire soon, blah, blah, blah. And so it'll tell you guys all the fine print and everything, but it will automatically sell this if you can't actually afford for the actual contract to expire or for these actually to execute. And so it will do so. Again, when I'm talking about trading options here, we're really talking about trading the option premium. We're talking about this number right here. We're not concerned with actually having this execute and actually fulfilling these orders or whatever. We're really just talking about buying and selling this call and put premium, and that's kind of the key behind these options. One more thing to note here is I want to talk about the selling side. This is something people don't really talk about too much, and people kind of get confused. So if I click sell a call, okay, so what does that really mean? That means I am going short a call, essentially long a put in a way, but also not. So here's what this means, okay? So I am short the call. So let's say I think Apple is going to stay below $300, okay? So what does that mean? Well, if I think Apple's going to stay below $300, what I could do is I can come over here and I click on the sell button. I go to the calls and I think, okay, I'm going to sell somebody a call, because what you could do is you could sell a call, okay? And what's going to happen here is I'm actually going to get a credit of $5.03. So in this case, I'm going to get a credit of $503. And so that's actually pretty interesting. So I will want to note that you'll get a credit into your account right away. But the problem is, if Apple does go above 300, you're going to be in a tough spot, okay? And so you want to make sure you can actually lose money here, okay? So if everything goes well, if all goes well, right, and let's say Apple closes on Friday at $299.85, just below, this didn't execute, we have to worry about it, you're good. What happens is you collected that money when you initially sold it, and that's money's yours. But if if it goes the other way, you could be in the negative and you can lose money. So I just want to put that out there as an option for you. You could do that. And one method of doing so to kind of start to grow your account in a smaller way or a smaller fashion is what I can kind of go do is I can start selling way out the money, because right now Apple's just about $300. I can start selling these 335 strike price right now. By the end of the week, I doubt at market right now has been red. There's coronavirus news, whatever, and I think, hey, this is actually going to be too complicated. It's a 2-option where I didn't click the first one. Okay, so what I can do is I can go in here, boom, and I can get this credit, and I can go, let's just say I want to do it, across 10 contracts, and I'll get a credit of $40, and most likely, based off my analysis, I think, okay, there's no way Apple breaks this high. Of course, you never know. You don't know, but I don't think it's going to happen. And I can start to grow my account by getting $40 credits, $10 credits here and there. That's one way to do it. I don't personally do this, but it's an option for you. I like to stick to the buying, the calls, and the puts. I'm not someone that goes into selling too much. I really like to buy calls and puts. And I think it's a lot easier to kind of start there as a beginner and someone who's just starting out. So one other thing I want to put you guys to when it comes to Robinhood is taking a look at this actual graph. Now I'm using the actual web platform, like the web app platform from Robinhood. So this is on my computer. You guys get the app, and there's a link down below for the Robinhood app and the Webull app. I'll talk about those more in a second here, but I have those links down below. But on the web platform here, you're going to get some pretty cool charting features, which is something that's nice and nice to see, I think. And so you can look at all these charts, year chart, you can see volume, you can see the RSI, the MACD. Of course, guys, look further. If you don't know what this stuff is, don't worry about it. But this is cool to kind of see. And so you can kind of look at the trend of Apple, look at the trend of other stocks you're trading, and get a good idea as to what's going on and where you think things are going. Basically, some technical analysis right there. Tons more videos on technical analysis online and things to look into, because it's a whole nother monster in and of itself. But it's good to know. And so my strategy here for you would be to figure out what works for you. But the reason why I pointed to that graph is because this graph can sometimes be, misleading. Not misleading, but tougher to see things as to, the ups and the downs and things like that. But really what you have to think about is, of course, yes, there's the time factors, there's the volatility. But if you can predict the move of a certain stock, right? If you predicted Apple in the past couple months, if you predicted Apple to go from 219 to 300, you'll make money. If that's going to happen, you go in and you find your options that work for you, that are not too expensive, that are not too cheap, whatever works for you, whatever works best for you, and you'll make money as long as you predict that move. So don't overcomplicate things. There's no need to overcomplicate your trading when it comes to options. Start very simple. Start with something cheap so you're not going to, lose a ton of money, or look into a paper trading platform like Webull, like TD Ameritrade, and I'll talk about that more in a second, guys. Stick with me here. We're almost done. But I want to go over some of my experiences when I'm swing trading versus day trading, because there's the day trade factor, there's a swing trade factor. Number one, if you don't have over $25,000 in your trading account, you cannot day trade more than 3 times per 5-day period. So in a given week, you can only day trade 3 times. So what does that mean? Well, many people end up swing trading. And so when it comes to swing trading, I have made a lot of money, and I've also lost a lot of money with this. So what I really recommend is buying time. So let those contracts go out a couple weeks, a couple months if possible, if you can afford to pay that. Of course, they will be more expensive because the time factor, right? But for example, these Apple contracts, let's say I'm predicting Apple, it pulled back 4% today. Let's say I think Apple's going to come back up to 320 by the end of the week. But let's say it doesn't happen by the end of the week. There's some negative news for the overall market, and it holds it down just by a couple extra days. And so next week it gets there. What ends up happening is I can get screwed, and I have gotten screwed by negative news coming out overnight, because you can't control that. That's something you can control. But the overall trend was up. So what I would recommend here is to buy some time. Buy these out a couple weeks, buy these out a couple months if possible. And if you can do so, then you can ride out those negative news. You can ride out those things because the overall trend is going up, and your overall kind of idea of vision of where the stock's going might be right. But if you get screwed up with those negative news things, which can happen at any time overnight, that's not going to be ideal, and it's going to, really hurt your trading account. So writing things out and buying the time is going to be very beneficial to you. So like I was mentioning, those 2 links down below, they're going to be signing up to Robinhood and Webull. So if you're someone who's brand new to Robinhood or to Webull, which I have talked a lot about Webull on my channel as well, I'm making more videos going over the platform there as well. The great thing about those two links is that you can sign up and get free stocks. Robinhood, when you sign up, you get a free stock. Webull, when you sign up, you get a free stock. And if you deposit any amount now, which they have changed from depositing $100 to now depositing any amount, you're going to get a second free stock valued up to like $1,400, which is absolutely awesome. Much better sign up bonus than Robinhood. And what you could do is utilize both platforms. So now what you can do, if you're more of a day trader, if you want to stick to day trading and you don't have that $25,000 and you're a beginner, well, guess what you can do? You can now do 3 day trades in your Webull account and 3 day trades per 5 days in your Robinhood account. So now you have 6 day trades. You can day trade once per day, and then you have one in your back pocket in case something happens, or if you're feeling really good and you want to make one more trade. And of course, you can go across multiple different accounts. You can even get TD Ameritrade. You can do all different things. And Webull is really cool because you can have paper trading on the Webull app. TD Ameritrade I have as well. I use that myself. Really, really good charting features, and you can also get a paper trading account through there for free. But that's kind of the idea, guys. And so hopefully that makes sense. I know this was kind of a long video, but hopefully it gives you guys a very good understanding of how this stuff works, how Robinhood works, how Webull works. And I'm someone who is actively trading in the markets myself. So if you want to see how I'm trading, of course, everyone's going to have their own niche. I tried options. I'm getting into penny stocks. I'm doing very, very well for me right now. So I'm kind of in that niche right now. I'm going to kind of ride that until things change and really see how I adapt to that. And so that's what I'm doing in Webull and Robinhood right now. I'm actually using as more of a dividend growth platform or growth account. So you guys can kind of see me as I make videos. As I add to this portfolio, I'll be making more videos showing you guys the actual stocks I'm investing for some of that passive income. So that's there right there. Make sure you guys jump down and grab those free stock links down below. With that being said, guys, check out the videos over on the side, and I will see you in the next video. Peace.